So that's a snapshot of the market. A lot happening today at the beginning of the year. Nischal, Maheshwari, market expert, joins in to put more perspective on the trade today. Nischal, always a pleasure to welcome you on NDTV Profit. Now, my first question, of course, RIL is putting a lot of pressure on the markets today and a lot of uncertainty as well as the geopolitical tension really receives 2026 quite emphatically, it seems.
Yeah, afternoon, Nisha, to you and your viewers. Yes, I think there has been some news on Reuters as well as I think Bloomberg that there were some supplies in January which Reliance is buying from Russia, and I think the company has come and denied it. But I think there has been an obvious reaction after what yesterday President Trump came out said that they might look if there is a resumption of trade, basically, they might look to do tariffs again. So I think that's a reaction, basically, which we are seeing in the Reliance in the short term.
Right. So, Nischal, in an environment like this, how should one really tread in the market with, the number of uncertainties that were legacy from 2025? It only got accentuated in the very first week of 2026. How should one tread really in this kind of a market? And what are the main themes and factors to watch out for?
So I think one should be totally focused onto the domestic consumption stories, basically. Domestic is the only safe thing, basically, which is sort of under control. Everything else seems to be, I'm saying, there is a huge amount of uncertainty around that. What's going to happen? I think the things are, especially the politically sensitive situations, are becoming more aggravated rather than actually easing out. And one should be very cautious in this kind of market. Don't do anything, basically, which is where valuations are totally out of whack. I think that's one very, very cardinal thing, basically, and it will become more accentuated in the current year. So be cautious about the valuations. And secondly, focus on to the domestic themes.
Right. When we talk about the domestic themes also, Nischal, all doesn't look well with the consumption and the demand space coming in a spotlight after the kind of pressure we have seen on Trent after its business update. So what is your view on the consumption pattern and the demand?
So I don't think so. Basically, Trent has done anything wrong. Basically, 17-18% growth on a large base is a very good number. The problem is basically the market has been saying that they are going to continue to grow at 40%, whatever the base is. And they took it up to 150 times, if I remember it right, when the prices went to around 58,000 rupees. So I'm saying that's the over exuberance of the market, basically, which is getting corrected. As far as the company's numbers are concerned, I'm not really worried. 17-18% growth, basically, it's a very decent number.
All right. So the market has trashed it and punished it a lot more than required is what Nischal says. Nischal, as we talk, the market is really seeing a lot of weakness. How do you expect it to, really trade in the near future? And what are the aspects on your radar?
So I think one of the biggest thing is obviously the current quarter result around the corner. I think that's going to really verify the themes which have been playing in the last 2 or 3 quarters, whether those numbers are going to hold on, whether the GST impact is going to play out, and whether the consumption, which we had all spoken about basically last quarter, whether that's going to play out or not. So I think that's an important part, basically, as far as the current quarter is concerned in the short term. But one has to be very cautious about the valuation, which I've been highlighting. I'm saying this has not gone away. We are still very costly.
So even in a weak market, Nischal, and 26,200 levels given away by Nifty 50 in the weakness today, you still find the market valuations expensive. Any targets that you have in the near term or middle of the year, the way this market trend should really go ahead?
So I'm not saying the broader market is costly, but the stocks like Trent and all, which you said just now, basically, I'm saying even at these prices, basically the stock is trading at around 75 times. Now, if you are looking at a PEG with a 17%, 20% growth also, if we assume, then you are saying there is a PEG of something like 3.5. So I'm saying that's very, very high. And that's what is actually going to keep on driving these stocks down. So one has to be cautious. Broader index seems to be okay. Basically, we are looking at a 10 to 12% kind of an earnings growth in FY27. And we are coming off a low base last year. So I think market broadly should be okay. Maybe around 8 to 10% kind of a growth on the broad market. But some of these stocks may not perform at all.
All right. Thank you so much, Nischal. The biggest takeaway from this discussion is stay away from the high valuation stocks, but also earnings backed by the lower base of the last year is going to give some momentum to the overall market. So all eyes would be on the earnings season coming up in a few days. Thank you so much, Nischal, for joining us with your expert take on the markets.